Hello everyone, and welcome back to Explain the Charts. Today is October 14th, 2025, and we are taking an in-depth look at Litecoin, or LTCUSD. The current landscape for Litecoin is incredibly polarized, with extremely bullish news headlines clashing with some harsh recent price action. On one hand, there is massive anticipation surrounding a spot Litecoin ETF approval, which some analysts believe is a done deal once the current U.S. government shutdown concludes. This sentiment has fueled some wild price targets, with pundits calling for moves to $275, $400, and even a long-term target of $750. Several articles highlight a break from long-term resistance patterns and surging institutional interest, painting a very rosy picture for the future. However, the other side of the story is one of recent pain. Just a few days ago, on October 10th, Litecoin experienced a massive plunge, dropping over 23% in a single day amid broader market turmoil. This has led to warnings that if key levels aren't reclaimed, we could see another 20% drop, potentially taking the price down to around $76. So we have a classic battle, a fundamentally bullish catalyst on the horizon versus a technically damaged chart in the short term. Let's jump into the charts to see what the price action is telling us and try to make sense of this situation. Looking at the daily chart, we can see the full story of the past year unfold. After a strong run-up that culminated in late 2024 and early 2025, Litecoin established a major resistance zone between $130 and $140. You can see multiple attempts to break through this area, especially in early October, which aligns perfectly with the news reports of bullish ETF speculation. This was the market pricing in the high probability of an approval. However, the breakout failed spectacularly. On October 10th, we see this massive red candle, representing the 23% crash we just discussed. The price plummeted from a high near $135 all the way down to a low of about $55, a truly staggering drop. This move liquidated a massive amount of long positions and completely shifted the short-term market structure from bullish to bearish. That low around $55 is now an absolutely critical level of support to watch long-term. Since that crash, we've seen a strong bounce, with the price recovering back up to the current level around $99. This indicates that buyers did step in at those lower prices, which is a positive sign. The key question now is whether this is the start of a new uptrend or simply a relief rally before another move down. Now, let's zoom into the 1-hour chart to analyze this recent crash and recovery in more detail. Here we can see the sheer velocity of that sell-off on October 10th. The price cascaded through multiple support levels without any hesitation. The news cited a broader market crash, and it's clear Litecoin was hit particularly hard after its recent run-up. Following the bottom near $55, the recovery has been methodical, forming a series of higher highs and higher lows. We can identify a key short-term resistance level that was just broken around the $98 to $99 area, which was the trading price mentioned in the AMB crypto article during the crash's aftermath. Holding above this level is crucial for the bulls in the immediate short term. The next significant hurdle on this time frame appears to be the zone around $102 to $105. This area acted as support before the final leg down in the crash, and as the news reports suggested, failing to reclaim this zone could invite more selling pressure. Volume during this recovery has been steady but not explosive, suggesting a degree of caution remains in the market. Switching to the 15-minute chart, we can see the price action from the last 24 hours. The price has been consolidating after its most recent push upwards, finding stability around the $99 mark. There was a significant dip yesterday down to about $94.76, but it was quickly bought back up, showing that buyers are still active on any weakness. This forms a very near-term support level around $95. On the upside, we're seeing some minor resistance forming around $101.50. For day traders, this range between roughly $95 and $101.50 is the immediate playground. A decisive break above $102 would likely signal the next leg up towards that larger $105 resistance zone we saw on the hourly chart. Conversely, a breakdown below $95 could see a retest of support levels in the low 90s. The volume profile shows that the most recent spike was on the move upwards yesterday, which is a constructive sign for bulls. Returning to the daily chart for our overall thesis, we have a fascinating setup. The long-term bullish case is entirely dependent on the spot ETF catalyst. News suggests analysts see a 90% or higher chance of approval once the government shutdown ends. If an ETF is approved, the influx of institutional capital could easily push Litecoin back to test the $135 resistance. A break of that level would open the door for the higher targets like $160 and the analyst prediction of $275. This is reinforced by on-chain metrics showing large wallet accumulation and increased network transactions. Therefore, any positive news regarding the SEC or the ending of the shutdown is a major bullish signal to watch for. The bearish case, however, cannot be ignored. The chart has suffered a significant technical breakdown from the $135 peak. If the current recovery falters, especially around the $102 to $105 resistance area, it would signal that the sellers are still in control. A failure here could lead to a retest of the recent lows. A break below the intermediate support at $84 would strengthen the bearish argument for a move down to the $76 target. The worst-case scenario would be a loss of the major crash low around $55, which would invalidate the entire bullish structure. For now, the price is in a state of equilibrium, caught between the hope of an ETF and the reality of the recent crash. So, to recap the critical levels and potential outcomes. Our major overhead resistance is the entire $130 to $140 zone. Intermediate resistance levels to watch are $102 to $105 and then around $116. On the downside, our immediate support is around $95, followed by a more significant zone at $84. The ultimate line in the sand for the current bullish recovery is the crash low around $55. Here are some potential scenarios. A bullish scenario, which I'd give a 50% probability, involves the price consolidating and then breaking above $105, likely triggered by positive ETF news. This would put a test of $135 back on the table in the coming weeks. A bearish scenario, with a 30% probability, would see the price rejected at the $102 to $105 resistance, leading to a slow bleed back down to test support at $84 and potentially the $76 target. This becomes more likely if the government shutdown is prolonged or if ETF news turns negative. A sideways consolidation scenario has a 20% probability, where Litecoin could trade in a wide range between $85 and $115 for an extended period as the market waits for a definitive catalyst. The most important thing to watch for is news related to the U.S. government shutdown and the SEC's decision on the Litecoin ETFs. This is the primary driver of market sentiment right now, and its resolution will likely determine the next major trend for LTCUSD. Thank you for tuning in to explain the charts. Please remember, this is not financial advice. All content is for informational and educational purposes only. Always conduct your own thorough research before making any investment decisions. We'll see you in the next video.